IRB Infra trades higher after toll collections for the month of November rise 6% month on month. Also, collections are higher by nearly 40% on a year-on-year basis.
RBI changes the securitization guidelines, says loans with residual maturity of less than 365 days cannot be securitized. NBFC stocks under some pressure.
North American Class 8 trucks or the orders fall by nearly 30% in November. Bharat Forge slips while RK Forging's GNA axles recover off day's lows.
Delhi High Court upholds a judgment that Natco Pharma has not infringed FMC's Indian patent. The stock is up by 2%.
Astra Microwave's board will meet on the 9th of December to mull a 400 crore rupee fundraise. Stock trades higher by about 3.5%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangalam Malu. Well, a quick word on the index first. We went down to around 18,570 odd and the initial dip has got bought into, so that's good news. The breadth of the market is yet again outperforming, so mid caps and small cap indices, both of them doing better than what the Nifty is doing. So first hour of trade goes to the bulls, I would say, going by these data points and given the fact that we woke up to a little bit of subdued cues. Well, let's get chatting with our first guest that we have on the show. Well, Rainbow Medicare, that's a stock in focus. There was a large trade that we saw yesterday. CDC, that earlier held close to 14.5% stake in the company, they completely exited. And some marquee names did join in. We have Dr. Ramesh, who joins us on the show. He's the chairman and managing director of the company. Hi, Dr. Ramesh. Good to speak to you after a while. Well, I was looking at this large trade, 14.5% equity changed hands. But the reported numbers, of buyers are far lower. I think it's only around 8.5%. Only around 55% of the buyers have been disclosed. Could you tell us who are the other buyers in this block and also clarify whether the promoters have participated or not?
Good morning, Nigel. Nice to see you. No, it's a CDC block, actually. It's a 14.5% is completely been sold. That's what information I've got. So what I do not know is still, I know we have got a marquee investors boarded and allocations still yet to know. Probably once I have a Ben pass, we will have a more clarity on that. So we'll probably know in a couple of days' time the allocations and those things. Right now, what we know is we have investors like UBS and the government of Singapore and ADIA, White Oak, ICICI Pru. These are the investors being kind of bought. Allocations, I think, probably it's a bit early to kind of give you the details.
Right, but we still don't know whether the promoter or the promoter family bought Dr. Ramesh.
Yeah, we haven't bought promoters. We still remain 49.83% promoter. We have not bought ourselves, sold.
And with this, the entire stake of CDC has now been sold, so that overhang goes away. Has there been any conversation with the current investors, as in prior to this deal happening, etc., any sense of the tenure that these guys would be investing for?
Well, I'm not sure because, as a part of the earlier in the past roadshows, what we have spoken to them, all of them. But prior to this deal, and I think, as kind of the SEBI rules, and it's a CDC block, they've sold to the bankers as a block deal. And currently, the 14.5% of the CDC is completely been sold. That's what the information what I have at the moment.
Okay.
So still, we haven't we haven't heard anything from the investors. Probably they will be in touch with me very soon.
Okay, Dr. Ramesh, as you said, you're a little below 50%. Most promoters like to hold a little over that 50%. There's a good opportunity. Will you look to take that holding? I mean, it's a small chunk, but wouldn't you want to hold a little more than 50% in the company?
Probably we'll make it up in future.
Okay.
Not at the moment.
So you're not closing that out. Okay, so maybe in fact you could do some creeping. We'll wait by and check out the BSE details as and when, if in case that does happen. Inorganic growth. We chatted a couple of months ago as well, and you've briefly alluded to the fact that yes, you're on the prowl. Do we hear something about this inorganic growth? You're sitting on cash of close to 450, 500 crores. In FY23, will you close some inorganic growth?
Well, I'm not sure it's going to be closed in FY23. As I said earlier also that, so we have been kind of very disciplined in the organic growth. And in organic, we are quite open about it. But however, the philosophical alignment with our model, as well as the scale which we can bring into those acquisitions, are very, very important. But we're open about it. When a right opportunity comes, of course, we'll be kind of looking at it.
All right, we take that point. And on the organic front itself, if you could give us a sense, I remember just post your numbers, you did speak about your average revenues per occupied bed sustaining, your occupancy sustaining as well. You're looking at a better range of features, etc. as well. So from an organic standpoint, where do you see the third quarter, the current quarter, be in terms of growth for you, average revenues, occupancies, etc.? And how many rooms do you plan to add by the end of this year and the next one?
I think we are on the right path now at the moment as far as the current year concerned, and we are tracking pretty well in terms of both occupancies. Our RPOPs, whatever we've been kind of guided earlier, I think we are very close to the path. I think it's a pediatric business is a pretty variable quarter on quarter in terms of RPOPs and those things. It depends on the seasonality and various other factors. But when you look at it year-long RPOPs, it will get settled to whatever we have guided about 47,000 around.
Okay, 47,000. I think you're expecting it to grow with inflation, maybe 6-7% growth on the ARPOB from around that 47, 48,000. Occupancies, they continue to hold around 56, 58%?
I think the occupancies kind of probably towards the year, it will settle down to probably 52 to 54%, somewhere around that.
All right, 52 to 54 odd percent. And what about your Chennai facility? You said that the initial trend was good, typically breaks even in about 12 to 18 months on the path for that?
Yes, we're doing well, actually. The good traction, a lot of new footfalls coming in, considering the new unit, and we have already come to close to a crore business. I think this is how the spokes kind of behave. They track, the traction will be pretty good usually, because once the hub is there, our reputation is built in the city, things goes well. So we are seeing the very, very similar traction, what we have seen in Hyderabad, Bangalore, and Chennai itself, Chennai as well. So I would expect Chennai to kind of a spoke to break even in about 18 months' time.
Got it. Okay, all right, Dr. Ramesh, thanks so much for stopping by. Once you're done with this interview, you see those little children on the floor, please give them a hug from our end. And
thank you.
And it's been good speaking to you. Thanks so much for joining in.
Thank you.
Okay, all right. Well, on that note, though, we'll slip into a short break. On the other side, the management of Dream Folks is waiting for us. Stay with us.
CNBC-TV18, celebrating 23 years of business leadership.
Welcome back. Even as the market has recovered a tad from the lows, we do have a bunch of stocks which are actually surging much more than the market's recovery. HUL is one of them from the frontliners, which has moved to the high point of trade. So a couple of these FMCG stocks put Britannia with that as well, both of them at the high point of trade. And in the last few moments, we've seen a bit of these auto stocks come back to M&M. The intraday chart of that one should come up for you in just the last 15 odd minutes. M&M2 has moved from the red into the green, currently at the high point of trade, and giving it company is Tata Motors as well. But importantly, from the broader markets, which has been a far better outperformer than the frontline end of things, we're seeing Westlife Food. That stock is up almost 6.5%, 7% on Friday itself. Remember, there was the outcome of their 2027 outlook for the company, 4,000 to 4,500 crores, the revenue that they target, with margins upwards of 18% as well. So the street likes that. Since then, the stock has done well, currently up around 6.5% odd. But talking about consumption itself, we do have with us the management of Dream folks, Balaji Srinivasan, who's the Executive Director and Chief Technical Officer, joins in because they've now entered into a partnership with Windsor Golf, which will give the company access to over 250 golf courses across India and the Asia Pacific and add some ancillary revenue to the company as well. Thanks a lot for joining in, Balaji. The first question, the obvious one is, what are the footfalls at these facilities? At what rate are they growing? And what does this mean then for your ancillary revenue? I mean, what kind of take rates can you expect for a company like yours from this business?
Yeah, good morning. So I think this is a very new service. If you think about all the premium cards that exist in India and also outside India, this is the benefit that is, typically given to the premium cards. So I think, and as the number of golfers and the interest in the sport grows, we are seeing a good traction where more and more premium cards are starting to give this benefit. In addition to some of the other benefits that we have in the premium space, like meet and assist, airport transfer, I think this fits in very nicely along with those to give a set of options to the banks and the issuers and the networks and other clients that they can consolidate, give benefits, and give more and more value to the end consumer. So we believe that this is something that will be of interest at the higher segment. And this is the reason we have also forayed into this space.
Okay, all right. Hi, Balaji. We get that point, but if you could give us a few quantitative numbers. The footfalls, as Manglam asked earlier, could you give us a sense on that? And also, your ancillary revenue was only around, 4 crores in the past year. Where do you see this number headed?
See, for us, the other services is something new that we have done, and that has really not been the bulk of the revenue. The bulk of the revenue comes from our lounge offerings and other airport services. So this is something that is new, and maybe it will take a few quarters for this to settle in and start providing some revenue numbers. But the idea is to actually start getting into the ancillary services and create an alternate portfolio for our clients as well. So that's the thought process behind launching this new product.
I look at Windsor's own loyalty programs and all the other cards which have partnerships with them, etc. There's nothing exclusive with Dream folks, right? So, I mean, what different are you offering and how does this add to your overall revenues?
Yeah, so actually the thing is that we've been very careful in trying to launch this new service. So I think while some cards do offer the golf service, the unique thing that we are really doing is actually building in the layer of, you could say, the benefit management. So today, the way it is done is predominantly a manually oriented process. People are doing card numbers on the phone call and so on and so forth. And the core technology that we have, where you are able to give the benefits for a card, where you have, let's say, 3 golf benefits per quarter or 20 per year, that is the core benefit that we offer if you think about in the lounge space or in the spa space or any of the other services that we already do. So we are basically extending the same tech platform and the benefit management, accounting management processes and the tech and the operations to golf as well. And the idea really is that for our clients, then it becomes much easier. They have a single player who's able to manage all the benefits.
Basically, you are sweating your...
So
if I get that right, you are basically increasing your offerings to the clients and sweating your own platform itself, for which you will get an additional revenue, which might not be, of course, as much as the others that you're getting right now. What does this do to your average gross profit then? I mean, it's been hovering around that 140 in that vicinity. I mean, what can we see this number go to? Not only through this partnership, but generally with the things that you are doing.
Yeah, so in general, our numbers will remain stable. So the take rates and the profit that we have will be, the plan is to maintain the same amount of profitability across all our portfolio. So that is the basis on which we are launching the products as well.
So what is the average take rate right now for your entire portfolio of services?
I mean the profitability, obviously, depending on the product, depending on the level, depending on the client, depending on the location, the take rates obviously vary. But I'm talking about the larger profitable number across the different products.
So let's talk about your margins itself then. I mean, 12% margins is what you did in the second quarter, doubled year on year. What's a sustainable level here?
I think we should be able to continue and that's our forecast. So we should be able to do 12 to 13%. That's our plan.
And from a medium to long-term standpoint, could you give us a sense of your revenue mix? What would it look like? How much comes in from airports? from railways you're entering and these ancillary services?
So for us, actually, most of the services are related to airports and travel. So we don't really sub-segment into these thing. But yes, the bulk of it is still predominantly going to be lounges. And as the other clients take up the other services, the ratio might change over a period of time. But it'll take a bit of time for that to happen. So we don't see too much of a change in the immediate short term.
Take that point, Balaji. Thank you so much for joining in and giving us all those details about this partnership and the business going forward. Margins will be maintained, and this just is an incremental service that you are offering to all your card holders. With that, we take a short break, come back, get you more on the markets and individual stocks.
CNBC-TV18, celebrating 23 years of business leadership.
Wishing CNBC-TV18 a very happy birthday. It has been fantastic 23 years for CNBC-TV18 and the team of CNBC-TV18. I think they have done a commendable job for all these years in filling life to the investing world of millions of investors, entrepreneurs and business people. And on this special day, once again wishing them the very best to continue to do the leadership role that they have been providing in providing the right news, information and analysis to all their viewers. Once again, a very happy birthday.
Well, it's turning out to be quite an FMCG day today. We did speak about HUL and Britannia. Well, look at a bunch of these F&O FMCG stocks. Add Godrej Consumer to that list. Godrej Consumer has moved to the high point of trade. Colgate is doing well. So Colgate too has moved into the green from being in the red for most part of the first hour of trade. Trent is the other stock which is doing well. So add FMCG and retail. And we already spoke about the way Westlife Development was moving higher. But a bunch of other stocks which are actually buzzing around also. We do have Astra Micro. The fundraise seems to have excited the street. And as a result of which, when he started the show, the stock was up around 3.5 odd %. Has now extended its gain, has moved to the high point of trade. And just keep an eye out on Hindware Homes. That too has seen a fair amount of traction. It's up about 1% today, but was buzzing around in yesterday's trading session. And in just the last 4 or 5 sessions that we've had in December so far, the stock is up 20 odd %. So that is something that we will be monitoring. But with that, we're out of time on this edition of Chartbusters. Thank you so much for watching.
CNBC-TV18, celebrating 23 years of business leadership.